All right, we'll be back from the break, and we're still ongoing with our conversation broadly on discussions to do with financial matters this morning. In the first pitch of our discussion, we're looking at the commercial laws in Uganda, how most of them are pretty much affecting the economy, and then how we are going to look at the other ones that are going to be tabled before Parliament, that is by the Right Honourable Prime Minister this very week. Now, in our second discussion, I did say we will be looking at the global inflation crisis, but with Council Lois in here, I would as well want to understand more about Uganda's financial status. When you look at the commercial institutions and all that, within a few discussions we've been having as well, there was something to do with Islamic banking in Uganda. This one is being pushed by Muslims most dominantly, and then also this is because at least it is regulated by the Sharia law in there somehow. Now we would wish to understand, does it give us a move for example, let's say an economic recovery situation, or is it an answer to the fact that, for example, small and medium-sized enterprises are crying foul to commercial banks who have high interest rates, and those behind the Islamic banking say this is a non-profitable venture in here. So more about the Islamic banking. What is it about?
Okay, you see, Islamic banking is governed by Sharia law, but the cardinal principle behind Islamic banking is it prohibits what they call riba, the prohibition against interest. So if any bank is to go into the Islamic banking model, they should be ready to use an equity participation mechanism in the businesses they undertake to finance, and then wait for share profits and loss.
Okay.
The problem, and I read the report by the Uganda Bankers Association, they said the reason why Islamic banking is not taking off is because of the tax laws, which is true, but not quite. I think that's scapegoating. But it's also true to an extent that indeed the tax laws need to be modified to enable Islamic banks operate through their profit and loss equity participation mechanisms of the banking system.
Okay.
The law, if you look at the Financial Institutions Act, by the way, it was amended in 2016, and that's when they introduced Islamic banking. If you look at all the aspects that were introduced in 2016, in the 2016 amendment, all of them have actually taken off. Bank assurance, agent banking, the Deposit Protection Fund amendments have also been implemented. 7, 8 years later, the only thing that we have not seen yet is the Islamic banking.
Okay.
So I think even Capital Markets Authority should look into Sukuk issuance, because Sukuk is an Islamic bond, Islamic bonds. Sukuk issuance, how they can amend the capital markets laws, or even create, because Kenya has regulations for Sukuk. Why is it taking Capital Markets Authority long? Because if you're going to issue Sukuk, and I conclude, is most Sukuk issuance is done through special purpose vehicles. So the issuer creates a special purpose vehicle, which special purpose vehicle subsequently issues that bond, that Islamic certificate. Okay. There are very many products that can be issued, but all that needs to be looked into by the Financial Sector Regulator, Capital Markets Authority, then even Bank of Uganda. But I think there is some foul play against Islamic banking. And I think it may, because even already licensed financial institutions can open up an Islamic banking window. None has done that. So Islamic banking needs a lot of law reform, soul searching, to see how far it can go.
Okay. And from there, if you to look at that, Islamic banking is something that you would wish to understand more as time goes by. It's a discussion that we'll be having for quite a long time, until maybe we see it on ground happening, without speaking about it behind closed doors pretty much. Now let's get into the global inflation crisis in the world. Just in early 2020, it is during the lockdown, is when the inflation stories and the inflation crisis started hitting hard. Globally, every other country has been looking for answers, and then in most of the countries in Europe and other developing nations have seen demonstrations and industrial riots, industrial action taking place, as many citizens have been coming out to strike over the high increasing inflation in countries, because governments were not bringing or giving them answers to that. So if we were to know What is one of the causes of this global inflation, if we are to say, and what is the quantitative easing, and what does the quantitative easing have to do with this cost of living crisis?
That's a good question. For starters, quantitative easing, I don't know why mainstream media, I think even globally, but globally they have tried that after some pressure came in from some independent-minded actors. In Uganda, there is this narrative that inflation is exclusively, that we're experiencing now, is exclusively down to the Iran war, the Iran crisis, or the Russia-Ukraine war only. I don't buy it.
Okay.
But what is quantitative easing? Now you see, this was it's unconventional economics that was introduced in the event of the 2008 financial crisis. Though Japan had been doing it for some time.
Okay.
Japan actually in the early 80s grew because of something called quantitative easing. Now, in layman's terms, quantitative easing is introducing new money into the financial system to deal with the problem. In Japan, they had something called window guidance, where you print money and direct it to credit guidance, direct it to sectors you want it. Quantitative easing, technically, now let me explain technically so people don't blame me for being simplistic. When the government wants money, now like so in COVID, there was no tax collections, no business was going down. They go onto their balance sheets, now like for the US Federal Reserve, and even the UK, actually all major economies, the central banks have printed money through quantitative easing. What they do is that they get their balance sheets.
Okay.
They purchase bonds, all financial assets, and then they use freshly printed money to buy those assets.
That is with
quantitative easing.
Okay.
What that does, and what the function of quantitative easing is long-term interest rate management. That's the entire goal.
Okay.
That's why you see for a very long time, developed economies were borrowing money, and even up to now, they're still borrowing money at near zero interest rates. Even now they're in negatives. Japan,
Okay.
EU, European Central Bank, has been in negative interest rates. The logic is once you print money, the prices of those bonds, of those assets goes up. And then the yield goes down. Now, once the yield goes down, it means the interest rates will go down. People will. Now, what happens is you print this money, you buy financial assets from the banks, and then you give the commercial banks that money to do whatever they want with it. In 2008, the US used quantitative easing to get out of the financial global crisis. The argument and the anger in the public was that that money was spent by bankers to give themselves bonuses at a time of hardship. They did not lend businesses. In 2020, 2 years ago, when the world was hit by the global pandemic, indeed quantitative easing took center stage. Actually, if you look at the balance sheet of the US Federal Reserve, it's now 8.7 trillion now. Why? Because the assets they bought using printed money have kept going up. So the curve goes up, and they put more money in the system. Why it causes inflation this time around is that when you print money and you do it for unproductive purposes, you see for a long time we've been looking at inflation through the consumer price index. But even then in the financial crisis, if you saw asset prices of the stock market and even financial assets like bonds were going up. Why? Because they're printing money and they were pumping money in those assets. We are not yet feeling it in the consumer. The UK had a fallow scheme. The US had CARES Act where they were giving unemployment benefits to unemployed people during COVID, and they had nowhere to get that money from. So the Federal Reserve of the US went and bought mortgage-backed securities, corporate bonds. I think the law allows them to buy corporate bonds, even the bonds that are already issued on the market, and then bought them from the banks and then used freshly printed money to give them, in the hope that the banks would finance people, give them unemployment benefits, or even the federal government would do the same. Once they printed money and gave it to people to buy food, oil, fuel, of course the prices had to go up. Now there we actually fell. And actually if you look at the report of the Federal Reserve Bank, the one for San Francisco, the branch in San Francisco, which I think caters for most of the western states of the US, that report actually clearly states that out of the 8-9% inflation they have, half of that was contributed through those unemployment benefits, money printed, they call them cash transfers, technically, but that is money printing. Why the inflation could have gone out of hand is that when you had increase of money supply, Then you had breakdown in supply chains. When you have now in COVID, supply chains were very greatly disrupted. So when they're greatly disrupted, now for you to print money and put it in the system, what do you expect? Little production, chasing too much money. But then there's a contradiction. The dollar has strengthened globally. Now one will say, this guy printed so much, the idea the dollar should go down. No, you see, in terms of uncertainty, people see the dollar as a safe haven. Someone would rather ditch shillings and go in for dollars.
Because it's with the forex rates, it's already hitting close to 4,000. It's 3,900 a bit.
That's true. So in Uganda, because you have three players in your foreign currency markets, you have the central bank, then you have commercial banks that trade amongst each other, and then on the end of it all, you have money shops that are called forex bureaus. So what happens in Uganda is, yes, globally they're printing money, and because fuel is priced in dollars. You need dollars to buy fuel. So what happens is, once these guys print the money, the futures contracts and people who trade the primary crude also go up and increase the price, or even the free market mechanism will of course make prices rise. In Uganda, because you do not have enough activities that help you earn foreign exchange, you have few dollars in your own system. So what happens is that globally there may be very many dollars, but in Uganda there are few, and people don't even trust your shilling in terms of uncertainty. So people will flee to the dollar, and I'm told now that the foreign reserves are actually, I don't want to be very harsh, but they could be dwindling fast.
Okay.
So the interventions that the Bank of Uganda has made to stabilize the shilling are because of a crisis that was not created by them, not even us, by the West. And most of that inflation we're having here is exported inflation.
It comes in from the other bigger economies.
The bigger economies.
Okay. But then one would still wish to understand, is this a dangerous situation? There's the quantitative easing. Is it a major destruction to the economies in any way?
You see, for a very long time, and I've told you, yes, quantitative easing, in my personal view, is dangerous.
Okay.
I read a report by the House of Lords, I think it's a parliamentary report, which is saying, is quantitative easing a dangerous addiction? And this report actually is last year, this year around 2021 in December. They concluded that yes, it could be, but they have no choice. Now, now you see, again, quantitative easing, if it's done right, doesn't create problems. Because I've told you for a very long time, Japan, the EU, but Japan in the 80s, they grew because of something called credit guidance. And what were they doing? They were doing sophisticated quantitative easing. They go and purchase those financial assets, then they buy them from the banks, and they use fresh paper money. Most money in the world is digital. It's not, they don't really print figuratively. They just get ones and zeros in the system and give them to a bank. You see? What they did, and why they did not see inflation for a very long time, even when they're printing money in Japan, is that inflation was felt through asset price inflation. So whenever someone was looking at the CPI of Japan, they were like, really? But the CPI is low. That explains why Japan went all over the world and bought a lot of assets. And that's why you saw they become a global. So if quantitative easing is done right, and for productive purposes, if you do credit guidance, if you print money to aid production, it's no problem. Okay. When you print money for unproductive consumption expenditure, you get inflation. And I don't know why the World Bank doesn't tell African people these things. But that is the sad reality. But quantitative easing is a double-edged sword. You need to do it in such a way that, even when you get asset price inflation in terms of financial asset, real estate, and what, the inflation is manageable, because all over central banks target inflation. And I was reading even a report by a Bank of Uganda recently. I actually read it in 2021, early 20, before even we had this inflation. In June 2021, Bank of Uganda monetary policy report stated that there are macroeconomic risks associated with what they call monetary financing. Monetary financing is a form of quantitative easing, though for it has just technicalities are different, but the function is the same. You introduce new money in the system. And they were saying at that time that monetary financing, what I don't know is if our central bank here did monetary financing.
Just lastly here, before we even close this discussion, one of your tweets, I believe, was saying that why is Bank of Uganda afraid to call out the American Central Bank for exporting inflation to us? And you were saying with even the measures of the quantitative easing, money printing are almost bankrupting Uganda. So, and then you were saying, why is the blame on the United States here?
I don't blame the US alone.
Okay.
I blame the entire Western coalition or Western allies. UK did quantitative easing. I blame the US because the US, for them, they have the biggest balance sheet of money printing. Because for them, they print around 7 trillion.
Okay.
The UK, European Central Bank, Canada, if you see, the benefit these people have is that they borrow in their own currencies. So they can actually wake up in the morning and print money in their own currencies and then finance their businesses. In Uganda, in Africa, we borrow now, we don't borrow in shillings, really.
But we borrow in dollars.
Maybe if you're on your treasury market here in Bank of Uganda, there you can borrow in shillings. But most debt that is coming in is dollars, foreign currency, debt. So the US, I blame them because, number one, they printed money, I think too much of it. When you print too much of it and then supply chains are disrupted, and then at the end of it all, at the end of the day, you have a Ukraine war, which even slows down how much of those supply chains can pick up. Because right now there is a global supply chain readjustment. That inflation we're having, and I don't know, I think this is something I should also suggest. These people, for them, they have swap lines. Once the UK Central Bank, the Bank of England runs out of dollars, they have a swap. Swap line is an agreement to exchange foreign currency. Like the Central Bank of the US can enter into an agreement with the Bank of England, give us pounds as the US Central Bank, and then for us we shall give you dollars. In Africa, there is no country that has swap lines at all. So for them, they cannot run out of foreign currency. We can run out of it. For us in Africa, we have to earn foreign currency. So once you see people here chasing the few dollars available, and we cannot even stabilize our dollar effectively, now Bank of England has to dip into reserves. You realize that there is a problem with the global financial system.
Okay. Council, what your final few words as we are summing up with our discussion?
On the commercial laws, I think the central bank, financial sector regulators and parliament should have a broader discussion. Okay. Because commercial laws in Uganda have issues. You go to the Insolvency Act, it has contradictions. You go to the Bank of Uganda Act, we need a Twin Peaks model of financial regulation in the financial sector. You go to the Capital Markets Authority Act. I've even lost count of the number of times I've been here to actually lobby for amendment of Capital Markets Authority Act. That law is badly drafted, it has contradictions. So I think the Law Reform Commission, like they did in 2010, should come up and again seek views from professionals on how to amend. Because they're not going to get a lot of views from non-professionals in the financial sector-based regulations. Okay. So I think we need to have a holistic discussion because Kenya cannot be ahead of us all the time. You have, by the way, the problem we are facing in the legal profession is that you have Kenyan law firms writing legal opinions on Ugandan laws, sending them to Dubai and getting deals, and getting money. So, but anyway, this is a discussion we should have. And on quantitative easing, I think the Bank of Uganda should come out and tell people the full picture. Don't just blame the Russia-Ukraine war, because this inflation is not down to, yes, the Russia-Ukraine war could have contributed to an extent, but we saw rising of commodity prices even way below February 2022 when Putin invaded Ukraine. So we need these reports on Bank of Uganda are a misrepresentation. And of course, they're not to blame for the inflation, but they should not be scared to call out people who have exported inflation here. So.
All right. And there you have it. This is Council Louis Chizito, who is at Anthony at Law Pentagon Chambers. We were discussing commercial laws, global inflation. We talked about something to do with Islamic banking in Uganda. So entirely financial matters in here. And for all of you that are still with us, stick around. Meanwhile, we're heading into the SMB Insight.